What is up, YouTube? Welcome back to Stacks by the Numbers. And I wanted to take a quick look today, do a little update on a company that I called out when they apparently had a delay in their earnings report. And obviously, they began to beat the stock up here. But this is something that we looked at a while ago. And in my opinion, I liked it in the numbers. I like the growth of the company. So let's get right into it. Name of the stock, Lovesac Company, ticker symbol LOVE, listed here on the NASDAQ. As we see right now, stock's a touch over $21 a share, down 88 cents, taking a 4% drop here today after going on a massive run for the last several weeks. Now, back here, October 18th was when I made the video. Stock was about 16 and a half. And again, they mentioned that the earnings release was going to be delayed. I believe that was the issue. But long story short, I basically said that when I originally looked at it here, stock was around 20, and I said easily that the company could go to 30, and then we see the stock ran up to basically 30, and then of course began to sell off. People started to take profits, and then during this whole September-October market sell-off, the stock drops down into the 18s, the 17s, and then they announced the news that they did, and the stock continued even lower. But as soon as I made the video, I said that in my opinion, they're basically giving us a $30 stock at a 50% discount. We can get in here at 16, and then obviously as it continued to drop, I know, I apologize I didn't do any update videos, but if you were in the Discord link in the description of every video, I mentioned multiple times in the Discord that, again, if I like it at 16, I love it at 15, at 14, and then as we see, it basically bottomed out at around $14 a share here, 14.18, and then went on an absolute tear. Now, it immediately jumped back up to $20 a share when these earnings came out, and then, of course, they kind of sold it back down, but again, you need to know, again, this comes back to time and experience. You need to know that if you have a beaten up stock that just had a nice pump rebound and then they beat earnings but they took them down, you need to know there in that situation when you're looking at a fundamentally sound stock, you want to buy the dip and then sell the next rip. So in my opinion, a lot of you should have been involved here, 16, 15, 14, and then obviously we climb back above this trend line here, 18, 19, 20. I would assume a lot of you would take the money and run unless you were looking for a longer term hold. And then obviously, even if you did trade it here, you know, you turn around, what, a week and a half, 2 weeks later, all of a sudden the stock's back down to 16. So that's what I mean. You have to know that you had a stock that just beat earnings that just hit 20 that you can buy now at 16. So conservatively speaking, you should at least get back to 20. And then that's what you're seeing here. Just within a couple of days, the stock runs back up to the trend line, 1950, 1960. And then, of course, with the markets continuing to rise, the stock chunked even higher. And as we see, hit $22 just this week. And now we're pulling back. We're right at that 20-day moving average now, and we have earnings coming out Wednesday before the open. So the problem is now, obviously, with earnings coming up, it's a little hard for me to tell where the stock is going to go. We have $326 million market cap. We're trading with a 25 PE. The PE could be viewed as a little high. However, the market capitalization overall, in my opinion, actually seems pretty low. I mean, the company's bringing in, you know, like $130, $150 million a quarter, and now you're telling me the whole company's worth $326 million. So this is why I said when I first looked at it at around 20, I felt it could easily go to 30. And again, when this dipped down here, in my opinion, I was very confident that, I mean, you know, 20 was a layup, and we could see potentially 24 and even higher if the company does come out and beat earnings. Now, the EPS for the last 4 quarters, as we see, has been pretty solid. The revenue does bounce around, and it's been climbing for the last 2 quarters here, Q1 and Q2 of 23. However, now estimates are coming in at 153.8 million, and the only thing that concerns me is this time last year, Q3 of 22, you can see that revenue took a dip down and profitability took a dip down. So I really can't say definitively, in my opinion, whether this company is going to beat earnings or not. Because, of course, if it does seem like Q3 is their weakest quarter, then we do have a chance that they will miss on the revenue side, as we see brought in 154.5 million last quarter. Now estimates 153.8. So unfortunately, only time will tell. As we know, earnings plays are a complete dice roll. But again, just looking at the forecast as well, we can see, look at this. I mean, average price target, 41.40. This is what I tell you guys when I tell you, follow the revenue, follow the money, find these companies that are growing well, bringing in consistent revenue, trying to consistently increase the size of the business and the amount of revenue coming in quarter over quarter, year over year. And we come down here, look at this, nothing but green. The company has been posting above analyst expectations for years straight now, going back to 21 at least, and probably even before that as well. But this is what I'm talking about, right? So again, this was a stock that we saw at 20 that I felt, in my opinion, could easily hit 30. Then they brought it down to 14. So if you didn't buy it at 14, 15, 16, 18, shame on you, right? I mean, not to be too abrasive with you here, but I can only do so much. I can't trade and invest for everyone watching these videos, right? All I can do is give my opinion, and obviously if it works out, it's great, and if it doesn't work out, it kind of sucks. But again, these are the types of companies, in my opinion, that you guys should be looking for, especially for the longer term, right? So if this company continues to beat earnings, let's just say for the next 1 to 2 quarters, and you give it a couple of months to basically reclimb back to where it was and get back to more of a quote-unquote fair value, this is what I'm saying. You could potentially see 30 plus. I think, in my opinion, that is very, very conservative with this situation. And now imagine if you saw my video when they had the dip and you were able to buy it at 16, 15 and a half, $15. Now you're going to turn around. It's going to be what, a 5-6 month hold maybe? And you're going to be close to $30. So obviously if you position at 16, 15, you turn around 6 months later, you're up almost 100% on the position. And again, that's on shares of stock. That's not even on the options themselves. So obviously all of my traders out there, that if you bought those options with some time on them, you would have seen probably much more than 100% return that the stock could potentially offer you. But again, when I saw that dip and the reason why they were dipping, I just felt very confident that the company, it was just going to be a minor speed bump and the company was going to rebound after that. So price targets as high as $60 here. We have 5 analysts looking at the situation, all 5 of them putting a strong buy recommendation on the stock, because look at this. Why wouldn't you? Right? Why wouldn't you say to buy this company? Look at this. More green than a Christmas tree. Again, this is a company that makes furniture, modular couches. Just remember, rents are going higher and higher also. So that's what I mean. That's why a company like this is like the IKEA of like couches or something like that, right? So this is why the revenue consistently keeps flowing into the stock. And again, looking at the numbers, I mean, 325 million, we can easily double that number. And that's why, like, that average price target of whatever it was, like 41 and a half, absolutely feasible. You're talking about a market cap of only 750 million. And again, if we come back here, look at this. The company brought in 650 million last year. And they were profitable. Yes, profit margins may have dipped from 21 to 22, but the company's still profitable. You can see the growth. Look at this, year over year of the revenue coming in. And this is, again, what I'm talking about. You are seeing, again, the Buffett method in real time. We're buying a company that was growing well, that was doing good. We were convinced where it could go. Then we had a massive sell-off. And you need to know that you are now buying a good, growing company at a deep discount. And you buy the dips and you sell the rips and so on and so forth. So I just wanted to do a quick update here on Love, just to let you guys know that, another saying, like they say, when it's selling off and everyone's fearful, sometimes that's when you got to push the buy button and you got to get a little greedy. But again, technically you could say that this was a speculative play, so that's why even if you waited after my video, saw it continue to go down, and say to yourself, oh, okay, good, I didn't buy it, I'm glad. But then you saw it immediately rebound back here to the 16s. This is what I mean. You should have known, something should have went off in your head that the stock has found its bottom and it's beginning to rebound now. But again, unfortunately, that comes back down more to time and experience. But we can see here for about the last 3 weeks here, the stock has been staying above this 20-day moving average. And I'm assuming people are pumped about this earnings report, because it's hard to tell whether it's selling off after a big rally, because it does look like there's like a big rising wedge here. So it's difficult to say if it's breaking down because it was overbought, or if it's breaking down because markets are down today, or if it's breaking down on anticipation of an earnings beat. In my opinion, little difficult to call here in the current situation. But again, earnings plays, if you're doing this strictly for the earnings play, obviously you need to know that is a dice roll. They're either going to beat or they're going to miss, so you're either going to make a very nice, quick return, or you are going to immediately lose your money. That's why earnings plays are so risky, which is why in between earnings plays, when we have a stock doing well that sells off, we buy the dip and we sell the rips. But as we see, again, during this whole month of November, the market has been absolutely raging, and of course it took love with it. And we can see that the MACD has now climbed to these heights here, not seen since back during the summer rally. So, it does look like the MACD flattened out there and could potentially beginning to curl down, because of course we're down 4% here. But also at the same time, we do have earnings coming in, and if the company does beat, I think this 23.5 mark, I think that's very easy. And of course, if we miss, the company could probably immediately take a 10% hit, and they might bring it back down to 19. But again, past performance looks pretty good. Earnings history looks pretty solid. And again, past performance does not dictate future results. However, because they beat the company up so much, and in my opinion, it's undervalued in the fundamentals, that's why even if they bring it back down to 19 or this moving average here of sub 18, I personally would, give it a couple of days to just calm down. And then I would probably step in and buy that dip and ride it back up to 20 plus. But again, that's just my opinion. And again, we can see also the RSI looks like it hit about 70. And now today it dropped back down, stock down 4%. RSI on the daily sitting at about 62. So that's why a lot of these technicals do seem to be lining up. And if we switch over here to the weekly, we can see the RSI sitting at about 49.25. That's why in the longer term, it definitely does have more room to run. However, now after this rally, like I said, now it's all up to earnings. Again, earnings coming out tomorrow morning. But here with the rage during November, we can see on the weekly, the MACD has recently crossed about a week or so ago to the upside. And we can see also that the stock looks pretty healthy, even though may potentially be forming a bear hammer. It does look like the stock has bounced off of that mid-Bollinger Band here. Actually, no, mid-Bollinger Band 2080, low 2097 for the week. So, technically didn't bounce off that mid-Bollinger Band, but it is above it. It is above it. And again, it was what, 23.5 on the daily, and now we're seeing 23.97 moving average here, 50-day on the weekly. So that's why, in my opinion, if the company does beat earnings again, as it's been for years, then chances are you're going to see 23.5 to 24. I think that's very, very feasible. Could even continue to climb with the FOMO volume coming in, and we can even get back up to this top Bollinger Band there on the weekly of about 28.5. And yeah, it looks like obviously it could jump up there and then pause, but obviously it depends on the numbers that come in here tomorrow morning. Switching over here to the pivot points very quickly, we can see our next resistance level, 2267. So again, depending on the numbers, if it is just like in line or a slight beat, we could have a jump right up to that resistance level, and then it could potentially hang out for like 1 or 2, 3 days before taking the next leg higher and starting to touch those moving averages. Switching over to the weekly, yeah, we don't see much. Obviously, midpoint there, 36.41. Again, very feasible in my opinion, but obviously that's going to take much more time. But overall, again, this was basically the Buffett method. And I know it seems like I'm doing a lot of update videos where it's like, oh, I was right, the stock was down here, it went up here. But again, I don't tout myself as some sort of stock genius or stock master. I'm sitting here not doing anything that any of you can't do, right? You can all look at the numbers, you can all draw out these trend lines, you can learn about all these different candles, right? Bull hammer, bearish hammer. You can learn a lot of these technical patterns as well. It seems like it might, look like a different language when you're looking at some of these charts and you start drawing the lines. You might confuse yourself, but each day you have to just slowly, gradually build on the knowledge that you have the day before, and soon you're going to learn about all of these candles, what means, we're going to keep climbing, what means the stock is about to drop down in reverse. You're going to learn the technical patterns, inverse head and shoulders, rising wedge, descending triangles, bear hammer, bull hammers, bear flags, bull flags, right? And again, they say that if you track stocks, there were people who, they've done studies and they looked at plays where they only took positions when something was forming like a bull flag or a bear flag. And, they were only successful like 55 to 60% of the time. So I know a lot of people may be sitting there and just saying, what do I look for specifically that always works? Or, what pattern usually works out more than not? Unfortunately, it doesn't really work like that, which is why you kind of have to absorb all of this different knowledge from all of these different avenues of investing, and then you have to kind of mesh them together. And this is what I talk about when I speak about the perfect storm, right? And again, another situation like Love, we had a good stock that was at 20, we felt could go to 30. Then as soon as it dipped below 20, this whole time, you guys should have been buying, right? Because at 20, we felt it was going to 30. So now that it's at 18, 17, this again goes back to take what the market gives you, buy the dips, sell the rips. The market was giving us a $20+ stock for 17, 16, 15. So all of you throughout October, in my opinion, should have been accumulating and building a position. And then obviously you turn around just within a couple of weeks and we're back at 20. And if you held longer, obviously you're up to almost 22 here just the other day. And this is what I mean. This is why, again, I know I have the time and experience, so it may seem like it comes easier to me than it does to you, but I have to say again, I'm sorry, but it's really not rocket science. It's really not rocket science, and especially if you're looking at it the way I do, with the more of a longer term outlook as opposed to a shorter term outlook, right? So right here when I made the video, if you asked me, oh, should I buy calls expiring next Friday? Well, I don't know. I don't know. In my opinion, it should have bounced here, but it broke 16 and dropped all the way to new lows and hit 14, right? So if you try to time the bottom and look for that short-term trade, you're going to get screwed over more frequently, and of course you're going to lower your success rate. But if we look at a situation like this and we say, okay, this is an overreaction, it really sold off, the stock's down here at 1630, I'm going to start buying. Then you wake up a day or two later, oh my God, they brought it down to 15, I'm buying more. Right? In my opinion, that's the way you should be doing it. Because if you liked it at 15, you're going to love, if you liked it at 16, you're going to love it at 15, and you're going to love it even more down at 14. So this is what it means right here in this moment when people talk about building a position, accumulating shares. But yeah, that's pretty much it. So once again, stocks by their numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comment section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. I'll do updates on stocks like Love. I do videos on, companies like Disney, Campbell Soup. I try to be completely diversified. We look at small cap stocks here like SoundHound, Stem Inc., And I try to cover all bases for you guys. And even in the Discord, I try to just, in my opinion, just give my personal advice of how you guys should try, if you can, if you have extra income, extra capital, if you want, you can risk doing some short-term options plays. I also preach about long-term shareholdings for your longer-term accounts, including retirement accounts. And this is how investing works. Unfortunately, you kind of have to do a little bit of everything, be diversified, and just kind of bring it all together and have it all work for you slowly over time. If you're just doing like naked call options, you're probably going to end up losing more than you win. And even if you are being successful, if you're one of those stories where, you took like $2,500 and now you're at like $25,000, that is when you take a step back, when you reach that next break point, and now you have to stop, reevaluate your situation, and now you're no longer a minuscule account having to take on more risk so that you could make more returns. Now you've made the returns and you have an even greater amount of capital. So in that situation, you need to know, again, this comes down to time and experience, but in my opinion, when you reach that milestone, that break point, you have to now know, okay, I no longer have to do 100% options. At minimum, I should take whatever, 20, 30% of this money, and I should roll it into longer term holds that will secure my capital, so to speak, or at least have it kind of maintain its value. Right? So when you hit that break point, you can look for smaller, nice growing stocks over time, potentially like a Fubo. But also at the same time, you need to understand that compound investing and doing the DRIP with the dividend payments, DRIP stands for Dividend Reinvestment Program. So when you do the DRIP for longer term accounts, you need to know, again, when you hit that break point, okay, I'm going to take a few thousand, I'm going to buy into a stock like a Hershey or like a Verizon, a company that we feel technically, in theory, isn't really going to go anywhere, should basically maintain its value, plus you're getting paid a dividend to own shares. And obviously you get them, you reinvest them. When they pay them again, you get more, you reinvest them. They pay you again, you get even more, and so on and so forth. Work smarter, not harder. But yeah, subscribe to the channel. That is our handshake agreement. And of course, Discord link in the description of every video. But again, like I say in every video, I can appreciate the fact that markets are very rocky, very uncertain, and very volatile. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by, and I'll see you guys in the next one.